Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Please check out the site and please send us a note after this interview if you're interested in attending Beaver Creek, Colorado's conference this year. Both Don and I are first day speakers on September 9th, and we're actually presenting together. So if you like our format, be a great chance for you to see us live. Don, welcome.
Yeah, John, I'm looking forward to this one. I've been following Paramount forever.
I know you have. You and I met probably about 4 years ago, and that was one of the first stocks that we talked about together. So I'm happy to have Rachel with us today, who's the CEO of Paramount, and we'll introduce her in about 10 minutes. First, I just wanted to go through some macro with you. There's a lot that has even happened since our last interview only a few days ago. We had a CPI read on the 12th that was slightly ahead of expectations, but as I was saying on our last interview, I didn't expect too much of the tariff stuff to get into that number, but we'll see what September looks like because don't forget the Fed on September 17th gets a chance to see a second CPI number and a second non-farm number, which I think will be relevant. Non-farm payrolls August 1st were absolutely terrible in terms of not only the number missing, but the revisions down. You and I both agree that that's an important fact, yet the market doesn't really seem to care, does it? It's just raging higher here. Seems like every morning I wake up, the NASDAQ and S&P futures are up.
Yeah, it's been quite a run since April. I think last time we spoke, last interview we talked, I said I was going to go dark here and basically say that not only are we heading into a recession, but this recession we're not going to recover from. It's kind of mind blowing to me when I watch I like in the morning when I stretch, I watch the halftime show, and then when I eat lunch, I watch the closing bell just to got to watch something, just for 5 minutes, just to get a kind of the heartbeat or the sentiment on Wall Street. And yesterday they had on Mark Reeder, one of the big heavy hitters at BlackRock, and he was saying this is one of the best investment environments he's ever seen. And I'm just shaking my head. And then this morning, that was the open on the halftime show. They basically threw that at a couple of the committee members. What do you think about what Mark Reeder said? And they agreed with him. I mean, it just blows my mind. People don't realize how shaky the foundation is of this economy. When this thing breaks, it's going to be unbelievable how fast it goes down, how unstable it is. Everybody thinks that this economy is solid as a rock. Everything is strong. Don't worry about a recession. Don't worry. We don't have to worry about a hard landing anymore. When this thing breaks, it's going to be really, really nasty. There's signs all over the place. That's the thing that really blows my mind is how can Reader ignore the underlying weaknesses in the economy? How can you ignore that?
I think Reeder and other executives at large firms like BlackRock, I used to work there. These guys get bonused on making money. They don't get bonused on telling people the market, like you and I have been saying, might go down 10 to 15% or more in the fall, because that would scare people, and they don't have products that would align with that kind of environment, right? They have mostly long only products. All of their mutual funds have a mandate, with very few exceptions, that they have to be invested at 80% minimum at all times, meaning only 20% cash in a distress situation. Um, these funds are just going for it, right? And they have to keep up with the beta that is being produced by the Mag 7, which is, as you and I talked about on our last show, a very, very heavy weighting in the S&P and other indices, or other funds, right? And so these guys keep the party going. But I think September 17th is going to be very, very important. If the Fed doesn't say all the right things and cut 50 bips, I think there's going to be a lot of questions as to how the rest of the year looks and really the path into next year.
Right, but the one thing is, I need to throw some arguments out there. If I'm going to say that we're heading into a recession and we're not going to recover, I got to have okay, Don, how could you actually be right?
Mhm.
So we haven't had a significant recession since 2008. And I would say that that recession was very short-lived. I mean, it was over in June of '09. I mean, over. So it was a mild recession in many respects. And we've been manipulating this economy since 2000. After 9/11, 2000, 2001, we've been manipulating it. Basically, we went kind of full MMT. So we've been doing this for 25 years, manipulating.
Tell people what that stands for, Don. MMT.
Yeah, modern monetary theory. It's basically Keynesian economics on steroids. It's this idea that debt doesn't matter, that you can just keep expanding your debt. It's okay, no problem. As long as you have a printing press, there's no big deal. That's MMT. So this has been building, building, building. And now we've reached a point, the thing that kind of blows my mind is that the last thing to fall, the last, the leg in the stool is labor, right? And the last two, the last labor report, not our payrolls. I mean, it didn't even bother reader. I mean, the last two, they were ugly, 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 right? It was like sub 25 for May and June. They said 75 for July, but the odds are that 75 is a bunch of baloney. It's probably also sub 25. So the labor market that's the last shoe to drop, and it's ugly right now. I mean, if you lose your job right now, and you're a professional, you have a problem. This is a weak economy. Bottom line, 50% of this country is basically living paycheck to paycheck and can't pay their bills. That's a fact. And the reason they can't pay their bills is because the cost of living has went so high, and their income hasn't kept up. So you don't have a strong consumer. 20% of this, 20% of are basically holding this economy up. 20%, and then in the Mag 7. Today they were going on and on about the Russell 2000. Well, guess what? The Russell 2000, it's not even close to an all-time high. Well, I guess it's close, but it's not in shouting distance yet. So it's not like the small caps are really going to catch on fire here, I don't believe. The only thing they have going for them is this idea that we can just kind of muddle along, and if they lower rates, we can muddle. But while we're muddling, the underlying thing, it's getting worse. So we're muddling, but we're getting worse, and the lower rates are not going to fix the problem. In other words, it's the Jim Rogers thesis that you can't go forever, if you will, without having a correction. Rogers says this is the longest recovery ever, and I think he's right. It's definitely the last 100 years, and those end. And this one, like I said, we're overdue for a severe recession, because I think this one will be severe, and it'll be so severe that we won't recover. Because the reason why is going to be just what happened in Japan when their bubble burst. So their bubble bursted in '89. And when it burst, they were just pushing on a string for 10 years. They could not get their economy growing. That's what's going to happen to us. It's going to be like pushing on a string. They'll print money, try to create liquidity, but it's not going to work, is my thesis. Bottom line is this. I'm just saying that there's no way in heck that this is a good investing environment. This is a dangerous investing environment. If you're in the stock market right now, you're rolling the dice. You're basically going against history, economic history. Jeremy Grantham, who's I think probably the most established person who's predicted corrections. He's basically he predicted the Japanese correction. He was out early. He basically said this thing's going to fall. It's one of the few. Then he predicted the '99 crash, and then he predicted 2007. He's predicted all three of them. And now he's saying this one's the worst one. That this is actually the most. I forget. I'm paraphrasing, but he basically this one is the most dangerous one of all. This bubble, and Rogers is saying the same thing. These guys have been around for a long time. It's not the best investing environment. So I just throw that out there. I'm just saying I don't think it's going to be long now. I think the clock's ticking. And when it starts, it's going to be really, really bad, because when it starts, this one's not going to be like 2008, because the reason why in 2008, they fixed it very quickly. And the reason that they could, because we didn't have inflation. So they could just print, lower rates to zero. They can't do that. So they can't print, and they can't lower rates to zero. They're two tools that worked in 2008. They're not going to have those this time. I'll stop there.
Correct. Okay, great. I know you and I thought about possibly getting into some equities today, but in the interest of time, I wanted to just pivot into Paramount Gold and bring on Rachel Goldman, who is the CEO of Paramount. The ticker is PZG. And hey, Rachel, how are you?
I'm well, thank you. How are you? Both of you, John and
Good.
Don?
Hi, Rachel.
Hi.
So, Rachel, Don and I had dinner with you, gosh, probably 2.5 years ago now. And we were asking, a number of questions about not only Grassy in Oregon, but your other projects. And we were intrigued at the valuation then. Valuation still seems very, very cheap versus peers right now. And you had some major news August 8th, so I'm sure you're going to talk about today. But congratulations on that. And I'll turn it over to you to give us kind of a 7 to 10 minute overview of the company, and then we'll ask some questions.
Sure, that's great. Thank you so much. Thank you both for hosting me today. Some of what I'm going to say will be old news to you, but hopefully some new news to your audience as well. I mean, just taking a big step back. So Paramount, we are a U.S. domiciled company. We're listed on the NYSE American Stock Exchange, PZG. Market cap today, I mean, from one day to the next, it can fluctuate, but I think we must be about 49 million market cap right now. And, one of the things about this company is that we have really worked hard to keep the share count low. So we only have about 74 million shares out, fully diluted. And, I don't have to tell you or your audience how difficult the last few years have been for gold companies, mining companies, particularly pre-revenue generating companies, to stay afloat, to keep on track with our programs. And for us, it was no different. So I am proud of our ability to keep that share count low, even though we were funding ourselves through a very challenging period of time. And so, as you mentioned, we have US-based assets. Our main focus has been the Grassy Mountain Project. That's in Eastern Oregon. And we also have the Sleeper Project in Nevada. And so at a certain point in the company's history, we had to decide which asset was going to be the primary asset. And the reason that decision was made after Grassy was acquired in 2016 is Grassy is relatively high grade, especially for today. It's about a 7 gram per ton, small underground mine. We have a total of 1 million ounces there, but the mine plan that we're based off of is roughly 400,000 ounces in this small underground mine. So basically leaving a lot of meat on the bone there for future growth in a production profile or adding additional years to the current 8-year mine life. And the reason it was chosen at that time as the focus was because of the grade. And so this, if we look back to where the gold price was when we made this strategic move to advance Grassy in 2017, it would have been, I guess, about $12.50. I'm going from memory, which is a bit flawed these days. But the point being, what we undertook was a deposit with great grades, even at that gold price environment, but in a jurisdiction that had never permitted a mine before. Sounds easy, right? Well, here we are, cycling almost 10 years that this project has been in some phase of permitting, because that predated us as well. But what's very, very exciting for us now, which you alluded to, was just last Friday, we announced, and the BLM, the Bureau of Land Management, announced that they had issued the draft environmental impact statement. Now, this is, like I said, the culmination of and a very important step in our process with 10 years of work feeding into it. And if I back up just a second, what I really do want to give a shout out here to is that I was listening a little bit to the talk about the status of the economy overall. And I have to say that the changes that have come out of this administration, this new administration, as it relates specifically to mining, are hugely beneficial for the industry in the U.S. And we were added to the FAST 41. It's a federal program, the federal FAST 41 list back in May. And at that time, we weren't really sure how it was going to impact us or how it was going to play out moving forward. But I can tell you it has been an absolute night and day shift in terms of attention, focus, accountability. And now we see actual progress too with the draft EIS being released, not just when they said it was going to be released, but in fact ahead of what their original schedule was. And so, the beauty of being on this Fast 41 is that there are federal websites. One of them is called e-planning, and the other one is the Fast 41, where the federal agency, in our case, the BLM, has to specifically list target dates for completion for different phases of the process. So you can go on there and you can see where they're at, what their new target is. So now that we have this draft EIS out, which is the environmental impact statement, they will, we're currently hosting a 30-day comment period. There's going to be a public meeting held in Vail, Oregon next Tuesday, the 19th. And with that 30-day comment period and the comments that come in, anything that is substantive and needs to be addressed will be done in time for the preparation of the final EIS, which, as you can see on their website, they are now suggesting will be ready this December. And not only will the final EIS be out this December, but they're expecting the record of decision, the ROD, to also be out this December. And so when I say this is a complete change from anything that the company has experienced over the last 5.5 years that I've been here, I'm not kidding. We've never had this level of visibility that this mine is getting permitted. And now it's not just getting permitted, but it's getting permitted on the federal side anyway this year. So we'll talk about the state as well, but I really do want to underscore that point of how much of a change it is for the mining industry in the US that there is this level of transparency and support and concerted effort to see projects move forward. And because they've identified, I believe, and rightly, that there are a lot of job creation opportunities. And we'll put aside the sourcing of materials from other countries for now, because one of the parts of our story, which is near and dear to my heart, is, and Don was mentioning this before, the job scenario. The part of the state that we're in, the part of Malheur County where we're based in Oregon, has the highest poverty rate of the entire state. It's got a 20% poverty rate. The rest of the state's about 12. It's got a median household income of $50,000. $50,000 for a household. I mean, even in the rest of the state, it's about 70. So the fact that we're going to create this economic development opportunity, which between our direct jobs, the indirect jobs, the induced jobs, that all get created to support a mine, you're looking at close to 200 jobs, and a lot of them are going to be very high paying, skilled jobs, So there's this opportunity for us to be a significant contributor to the county in that way, and, partnering with educational institutions to help bring in the skills that we're going to need. We have a commitment to hire as much as we can locally, and that is our goal, is to be that go-to employer down the road once this is up and running. So it's a really exciting time. I've been so encouraged by the support that we've been seeing at the county level from all of the cities in Malheur, from the state. We've had support certainly from all levels of the political infrastructure as well. So it's really an exciting time for the project. So, I mean, I don't want to focus only on the federal. I wanted to pause in case there was any questions, because I did just dump a lot on you right away.
Sure. So just to point out a few things you mentioned, 74 million shares fully diluted. We'll get into the share structure a little bit later. The draft was announced on August 8th. You said you've got possibly two, not one, positive events happening in December of this year. And one question is, how many companies roughly do you think are in Fast 41? How significant is this versus, the peer group?
I actually don't know how many are currently on it, because once we got on it, I kind of stopped paying attention when we first. So at the end of March, well, I'm just being honest. At the end of March, when President Trump first announced the creation of this National Energy Dominance Council, and they talked about the list, and I thought, how do we get on the list? And lo and behold, we finally did. We were in the second group of projects that got added. So there was an initial list. I think it was earlier in April, maybe, and then we got on in a group in May. And so I have seen other projects get added to that. And, and I think I believe the intention is to put as many projects on there as they can. So I can't really speak to that part. But what
Okay.
I will say for us specifically, um, we had been mired in a lot of slowdown and lack of focus. I'd say that with this newly positioned spot, and we're on what's called the transparency list. So there are different tiers of the Fast 41, and in some cases they're like, okay, that's it, we're lighting a fire under this, and it's happening very, very quickly in different types of projects. It's not only mining. And in our case, we're on the transparency list, which is where I said they have to detail the timing of when they expect to hit certain steps. But we've had so much support from the BLM at the state level and our district level. And there's really been a big focus on helping to get this to this point and beyond. And that has been a marked change and a very welcome one. And, we're dealing with some very skilled and committed individuals. So I'm really happy about that. What we should talk about too is that we go through two permitting processes. So that's the federal side. On the state side, where it's a little bit more complicated, you remember, is because we're the first project ever going through permitting in the state of Oregon, we're essentially the guinea pig for the state level permitting process and all the different agencies that are involved in that. So that is led by something called DOGAMI, which is the Department of Geology and Mineral Industries. They are the coordinating agency for all the other individual agencies involved in permitting. They're going to be issuing to us what's called a consolidated permit package and a draft form. We're hoping that it comes out in the next month or so. They do not have a fixed timeline to do that. But we had also been the very first project that ever got what was called a completeness determination for our application. That was back at the end of 2023, which led to the notice to proceed, which was a condition precedent for us to close our important financing, which has kept us afloat until this time and beyond. And so we're hitting a lot of firsts as part of this process. And I think when you do that, you always uncover some things along the way that, well, maybe this sequence of events doesn't make sense, or maybe this part of the process doesn't make sense. But being in here early, having a good relationship with our partners at the regulators, I think is also going to allow us to help influence perhaps how things are going to be managed moving forward, which I think is going to overall be great for this, not just for our county, but for the state, if they're open-minded to seeing more development along these types of lines moving forward. So if our state draft permits come kind of September-ish timeframe, they have some fixed period of time for public review and modification to any final, but we could have basically this entire project fully permitted by the end of the first quarter, I'd say, from the federal and state side. So it's really suddenly, after years of permitting purgatory and having no visibility at all, we now have very clear visibility on the steps forward, which is very exciting for us.
Great. Well, I wanted to touch on the 74 million shares because we saw some activity today in the stock, or we're recording this on August 13th, where, it looked like about a block of 100 to 200,000 shares just hit the market, like kind of like a market order, which is nuts to me in this kind of a market that someone would do that. But when you have only 74 million shares fully diluted, a lot of those being held in tight hands, that does have an impact on share price. The stock was trading between 70 and 71 cents. I happened to be watching it, and it got into the 66 and a half, 70, 67 range real quick. And that's an opportunity, as how I coach my clients, on someone who's a rookie trader to dump shares like that without, understanding what you just talked to us about, right? It's like, if you're going to dump 200,000 shares, at least call the company and get a better understanding of what you just walked us through. It's unbelievable to me. But as I try to tell people, you and I, Rachel, both come from a capital markets background. We know how things actually work. And if it's some like big client who calls a broker and says, "Hey, dump this," they dump it. That's it. It's not like there's this process of them, "Oh, let me call Rachel and get a better understanding of what I'm about to sell." And so that's why we have limit orders out there, but we usually have two sets of limit orders. One is nearer to the action, which would have got filled in that scenario. But then we've got something back around 66 and we got filled on that too. So it's like, really interesting to to see these kind of things happening in a bull market for gold. Can you talk a little bit more about the share structure for us in terms of, where that 74 million shares are, if you would?
Yeah, so the 74 is fully diluted, so it's actually 72 on a basic basis. We have a very strong supportive core shareholder base, so about 30% is in solid hands between insiders, directors, management. FCMI is our largest reported shareholder, who's been extremely supportive. Especially recently as we've been moving through this phase of permitting. We also have Seabridge Gold as a big shareholder. So Rudy Frank, who's the founder and CEO of Seabridge, he's also the chairman of Paramount, longtime supporter, both as an individual and Seabridge as a company and what we're doing. And we also have Ausenco in there as a shareholder. So just for reference, Ausenco is a global engineering firm who led the feasibility study on Grassy, which actually we'll have to update. So I'm thinking they're in pole position to get the the gig for the new feasibility study. No, but all kidding aside, they've been a very supportive shareholder as well. So and then there are others who aren't named within there, but we have been lucky in that sense. So I too struggle when I see trading days like that, because so many of the shares that are held by stable hands who don't have any interest in trading around a position. But, as you said, coming from a capital markets background, it's hard to ever fault people for taking profits. And I do acknowledge that the stock just this year alone has done very well after having had, a real flat line for a few years as we were working through our permitting purgatory. So I can understand where maybe some of that comes, but I'm with you. I feel that we're the best position that we've ever been in. And we haven't even talked about the fact that the gold price is double where our last feasibility study was done. So, when I look at that old study where we're going to generate about $40 million in after-tax free cash flow annually, and that was at a $1,750 gold price. And now, certainly we don't do it at a market price, but any degree of price higher than that, and we're going to see, a commensurate increase in the economics and the profitability of the mine. So I find that a bit confusing too. But I am also heartened by the fact that the long-term shareholders who understand what we're doing, understand that it takes some patience, that we don't control the timing of certain events. They've been supportive.
Okay, so thanks for all that information on permitting. I know permitting is very important. I don't think permitting is an issue for your project. I think you have it well under control. I like the fact that your insiders are very strong. So my first question is, what are the steps that are required to get it construction ready? How long it will take and the cost? Okay.
So right now, the total CapEx for the project based on the 2022 study was $136 million. Certainly we're going to have to update that study, and I would expect that number to go up. Order of magnitude, I really wouldn't be comfortable taking a guess at, although I would say that I'm pretty sure that the move in the gold price will more than offset any increases that we're going to see from a capital or operating cost standpoint. So for us, next steps, if we assume that I'm accurate in my latest prediction that we'll have all permits in hand by the end of the first quarter, the next steps for us beyond updating the feasibility study, doing detailed engineering, we have some drilling that we need to do into the high grade portion of the deposit. This was part of our agreement with Sprott, who funded us at the end of 2023, is that we would do some additional drilling into the high grade. And so those we would do before breaking ground as well. And from a timing standpoint, I think we'd be looking at about an 18-month construction period. We can sometimes call it 2 years to be conservative, but 18 months. There is certainly some potential that there are some long lead items that we might be able to start tackling ahead. I'm thinking specifically about upgrading the road and things of that nature, because these are things that can happen, in advance of or concurrent with other parts of development, whether it's, sinking the decline, like, driving the decline or, starting to plant construction. So yeah, the total CapEx number, we'll have to wait and see what that 136 ends up looking like. But those would be the steps that I would see and roughly the timeframes it would take us.
Have you started talking to finance people, banks, as far as financing the CapEx yet? You think, are you getting good feedback there? Do you think there's a possibility that you could borrow, say, 2/3 of it?
It's a great question. We have not started in earnest talking to any lenders yet, because I think there's a view, I share this view, I think my board shares this view too, that our cost of capital will only go down as our permitting success goes up. So at each phase, I think we're going to see that belief come into play that this is getting permitted. And so, there's always a little bit of that dynamic that goes on too. And because of the time frame associated with the different steps, including the final permitting steps at the state level, it does build in kind of, a 4 to 6 month buffer where we'll be able to start having those discussions in earnest. Certainly in my last round of financing discussions prior to striking the deal with Sprott Streaming Royalty, I had a lot of conversations with more of the project lending, streaming royalty companies at that time. And I can tell you, even for them, and they're not banks, the risk aversion around permitting was significant, not just because of permitting, but permitting in Oregon. And so this is why I'm saying there is no science to this other than in all the conversations, including those that were Rachel, Oregon's never going to permit a mine. Now that we get to prove them wrong and put that to rest, I do think that we'll be in a better negotiating position at that point.
So your previous, I don't know if it was a PFS or DFS, you had an ASIC around $1,000, which is very, very low in this environment.
Yeah.
Even if it goes to 1,300, it's still going to be low when you're looking at $3,300 gold. So you guys, your payback period is going to be very low. So I'm hoping you don't do any streaming deals, because when you have a payback that fast, there's no reason to give away your gold. So from a valuation standpoint, I value your company at $5,000 gold because I believe that's where we're heading. So, you're not going to be in production until early 28, maybe. So by then, I think we're at $5,000 gold. So even if your ASIC goes to $1,400, $1,500, you still have $2,500 in margins. So $2,500 margins at 50,000 ounces a year is $125 million in free cash flow. You put an 8 multiple on that, which I think is very conservative with that much of a margin. You have a $1 billion valuation.
Right.
That's just on Grassy Mountain. Right. That's one of the reasons I like your company, because I value in the future. Now, now we're going to move over. So that's kind of where I value your company. I value Grassy Mountain at $1 billion. So it looks pretty darn cheap at $50 million. As long as you do a good financing, the upside is tremendous. But Grassy Mountain is not your flagship property. So let's talk about Sleeper. So Sleeper is in Nevada. It has a historical resource of 3 million ounces at 0.35, and then it has another 35 million ounces of gold at 3 grams. So
silver. It's silver, yeah.
Silver, yeah, another 35 million silver at 3 grams. So is that 35? Is that all oxides?
I would have to double check. I would have to double check that, Don, because the way the deposit sets up is we have the oxide mixed or transitional, and then the sulfides below. And so I'd really be guessing at this point to say what percent was where. But yeah.
Even if it's 50-50.
Yeah.
If it's 50% oxides, it's still a lot of gold.
No, it is.
1.5 million ounces of 3.5 gram oxides in Nevada is worth a lot of money. So basically, I've been telling people, we're getting Sleeper for free here. Grassy Mountain is worth a hell of a lot more money than $50 million.
Right.
So you're getting Sleeper for free, and it's a big It's a big deposit.
Well,
Plus,
not only is it a big deposit when it currently has, it's a huge acreage position. I mean, it's 40,000 contiguous acres in Nevada, and the 3 million ounces. I kind of view it as like a starter kit in terms of, well, where do we go from here? And it's got decades and decades of data. And so as the world has evolved more in our industry in understanding how to manipulate data, AI or data mining, whatnot, for targeting, for other things, I mean, there has to be better ways to kind of crack the code with Sleeper, and that's really what it requires. And I know you love Sleeper, and I know that you're going to bug me that we haven't been spending money on it, but clearly it's been because of the permitting efforts at Grassy.
No, the only thing I'm going to bug you about is I want you to keep at least 50%. If you keep 50%, your company is worth a fortune. So 50% is Sleeper, and then Grassy Mountain. I think Grassy Mountain is a 12-year mine. Like you said, you're only 400,000 ounces for 8 years. So I think this is a 12-year, maybe more. So I guess I'll end it with the exploration potential at Grassy Mountain. So you're at 1 million ounces. I think you're going to possibly add a few more, right?
Oh yeah. I mean, this was drilled off, very well drilled off within the bounds that we currently have, which gave the confidence to be able to generate the 2 feasibility studies that we have. But what I will say is that, all the drilling obviously came from surface. It's a pretty shallow deposit, right? So mineralization starts about 50 meters from surface, and the core of the mine that we're building is about 150 meters. But even with that, there was there were limitations to how much you're going to drill underground from surface when you've already drilled off your economic deposit and you're a small company and you're, saving your pennies for every little thing. But certainly, we've already identified a number of near mine exploration targets with some decent grades there already. And, the way the deposit sets up, there's higher grade at depth. And so has at depth been fully drilled off and closed off? No, it hasn't. And that's something that's easier to tackle once we already have a decline into the deposit, is to do some additional drilling underground from underground. So I would tend to agree that I look at the 8 years as a worst case scenario, and I would be shocked if that's all it was, because it is only 400 of the million ounces that we already have identified.
There's no way it's only 8 years.
Yeah.
It's very likely double that. Like you said, you haven't really, there's more drilling to be done. Well, unless you increase production, but I mean, if you stayed at 50,000 ounces, it would probably double that. But yeah, so Grassy Mountain is a really good foundational mine to leverage into Sleeper. So yeah, I've always held the stock. I always knew long term it was going to pay off well. One thing is you've done really good. I mean, most companies that I've held, as long as yours, I'm kind of underwater, but I'm not underwater on Paramount. I'm doing well on Paramount.
I love hearing that.
So Paramount looks fantastic to me. I like to own stocks that have potential, Tim Bagger, but I like to own as many potential Tim Baggers to get my hands on. So if I can find more Paramounts, that's great. The reason why is you were so cheap because nobody believed that you were going to get your permits. Nobody believed in it. And I'm like, well, I still got Sleeper in my back pocket. So even if they don't get their permit, they can always pivot to Sleeper. But yeah, I mean, your valuation at one time, I think you got down to 20 million or maybe even less than that. I mean, it was just crazy cheap at one point. So yeah, I'm excited about the company. I think you've done a great job permitting this thing. You were the right person for the job, for sure. You need a lot of patience.
Well, thank you. I mean, I have to say, I have been hands-on the permitting since April, and it was coincided with a lot of good things happening too, Fast 41 and whatnot. But it's certainly been a crash course on the fly about all these moving parts, and it's been very exciting. Very exciting to see the progress.
Well, I hope you permit Sleeper. That would make my day.
I can promise you this: Sleeper would be a lot easier to permit than Grassy.
Well, what I
True.
mean is I want you to be the operator. So I want you to operate and permit it. All
Well,
right,
we'll
John.
take that into consideration.
I'm good. I'm good. Thanks. Thank you, Rachel.
Okay. Yeah.
Great.
Well, Rachel, we'll wrap it up. I will point out to people because I watch the stock pretty closely. If you look at a 5-year chart of PZG, you'll see some spikes to the upside in that chart, and I believe it was at least 2 times, maybe 3 times, that the Wall Street Bets Reddit crowd got into the stock. Why did they do that? You and I may not ever know, Rachel, but we're happy that they did. We hope they come back. And with an Amex listing, that's probably part of it, right? Because I noticed a lot of Amex stocks and NYSE light stocks and NASDAQ stocks were getting played with. I think they're going to get played with again as soon as we get this sell-off that Don and I were alluding to, whether it's this year or next year. There's going to be a lot of people after this earnings season looking to play with some stocks and have some fun. And these things can move because with 74 million shares fully diluted, if 30% of that even is just tied up, forget the rest, you don't have a lot of shares out there. And that was evidence today to the downside, right? We're not saying that this is only an upside opportunity. It can also be a downside opportunity too. I mean, I see a lot of thinly traded stocks like US Gold was a good example, USAU, very similar situation, very tight share structure. That worked against them for a long time. But now if you look at the chart, it's working in their favor. That might be one to talk to, Rachel. You know, George B over there was talking about doing half of his capex in debt, and he's a little further down the road than you are. So you may want to check with George. He's been doing this 30 plus years, and I know their team is all over that. And Don and I just interviewed a company called Sonoro Gold. They're down in Mexico. Again, 35 plus year veterans. They're talking about 2/3 of their capex in debt. So those are 2 names you may want to check in with as you get closer next year.
Oh, absolutely. Thank you. Yeah.
I had one final comment. So if you keep 50% a sleeper, I have you valued as a 25 bagger.
Oh, yeah. There you go, Rachel. There's incentive.
50%.
That is something. No, and John, you're making a very good point on the financing. I also think that this environment, particularly in terms of fostering a U.S. domestic mining industry, I think that too has some potential to play out both with banks, traditional banks, but also with some potential for government grants and funding, which is not something we've looked into at all yet, but is something that was mentioned in the original executive orders that came out related to mining, was that there was going to be funding available. So, you know, I don't know that we're going to be the first for any of these things, but certainly there are mechanisms in place that I think could be really interesting for US-based operators like ourselves.
Good point. Well, Rachel, we'll leave it there. Thank you again for coming on. We really appreciate it. We hope investors will take a look at PZG. Both Don and I, in full disclosure, own the stock. You know, part of our screening process is people, and Rachel's done a great job of updating both Don and I throughout the years on the good and the bad. And right now, it's really awesome to see you in the good. You know, after August 8th, I think the path is clear. And you know, in our sector, it takes a while for people to get on board. You know, it's not an immediate thing where you put out a PR press release and all this buying comes in, right? It takes weeks sometimes.
Absolutely.
I think when you get to a better period of seasonal strength, like September, October, November, I think more people are going to get into the name, and I hope that some of our listeners will beat them to the punch.
Thank you. I really appreciate the time. I appreciate both of your support, and it's great to hang out with you here, and I'll see you soon in person.
That's great, Rachel. Thank you.
All right. Take care. Bye-bye.
Yeah, bye-bye. So, Don, you and I will summarize now. We only have about 5 minutes, so why don't I turn it over to you?
Well, I definitely think this has 25 barrier potential. She said in the past that sleeper's a little bit too big for them. They think that this thing's going to be a 5 million ounce deposit, kind of a tier 1. So they think it's going to grow in size. So tier 1, she thinks that's a little bit too big for their company. But maybe they, like I said, that's why I think they can hang on to 50%, which I think they could, but they might have to give this to a major to build. There's going to be a lot of people who want to build this project, especially if it does, like right now it's 3 million, but if it gets to 4 or 5, 4 million is really is kind of an important level for tier 1. Because at 4 million, depending on how many ounces a year you can build, but that gets into the major territory. And five definitely does. Five is a tier one, but I think this thing's got is four all day long. So it's a very exciting project. It's just sitting there in Nevada. And so now at high gold prices, I think what's going to happen is as soon as they get this thing built, they're going to start drilling holes, and they're going to put out some really good drill holes, and then they're going to update the resource, and, and then people are going to go, "Whoa, what? I didn't know there's a project in Nevada that big." There are not very many undeveloped 4 million ounce projects in Nevada. Not very many, and
Nope.
and there's a lot of companies that want to mine in Nevada. So that project is going to have huge demand. So I think
The
Grassy Mountain,
logical choice is Newmont, Barrick. I mean, like they're all over that state, but
Anglo as well.
Anglo as well, yeah. I mean, but the list goes on and on. I mean, if you go to the mid tiers, they're looking to grow their production over years to come, and this is something that's not Paramount's main focus right now. But I've talked to Rachel, as I'm sure you have, for years now, multiple times about the potential that Sleeper has and why you should hold on with both hands and not give it up. And she's done a great job of doing that. She gets calls all the time on Sleeper, she tells me. It's
Yeah,
like who wouldn't get calls at 3 million ounces with 40,000 acres, right?
yeah.
There's interested parties. That's what I always coach my clients on, Don. I'm like, just because this stock isn't doing well right now, you have to look under the hood sometimes and understand what the potential is down the road. Like they have done a great job of holding those assets where others may have just sold them
Here's
to fund operations or
here's
become a
one.
lifestyle company.
Yeah, here's one that'll kind of spin your noodle a little bit. Every 1 million ounces of silver production is worth $500 million. The reason why is because if you get to $100 silver and you have your all-in cost is $50, 50 times one is 50 million, times a 10 multiple is worth 500 million. Every million ounces is worth $500 million at $100 silver. They have 35 million ounces. And even if it's 50% recovery,
Mm-hmm.
that's still a million ounces a year. So
Right.
just silver alone on Sleeper is worth 500 million bucks.
Wow. That's shocking.
Yeah.
Yeah, that's really like people talk about blue sky. Like that's not like a blue sky, like cross your fingers and throw a home,
Already
throw a Hail
there.
Mary. This is Nevada, people. Nevada
Sit
is the number
ground.
one mining jurisdiction globally.
I actually think that their silver content will go to 50 million ounces. And if they get a recovery rate of 60%, that takes it to 30 million.
Hmm. Very exciting. Thanks, Don, for the great analysis as usual. Paramount Gold, PZG on the Amex. Watch that chart, guys, that I pointed out. 5-year chart shows multiple spikes over $1. We're trading at 66 cents as we record this, down almost 7% today on no news. Those are the opportunities you look at in a bull market, right? You got to buy the
Yeah,
dips.
it's
And
it's it's a total gift. As long as you're a long-term investor and you believe that the gold price is going higher, it's a total gift.
yep. Well, thanks, Don. We'll leave it there. And thanks to all our listeners. Please, send us any emails that you'd like, any other company ideas. We're always looking for new names. So if you see something that is flying under the radar, keep in mind we're value oriented. Guys, we're not looking for something that's already up 20x. We're not going to interview them. We're looking for stuff that's going to be able to move, with the price of gold and GDX and GDXJ at all-time highs, or not 10-year highs here, trading extremely well, which we'll get to in another interview. But we're looking for value, and PZG represents that in our view. So, thanks everyone, and we'll see you soon.